Hello, everyone. I'm just starting things here. So the live stream, it's our first time here in YouTube in live stream. So bear with us, stay with us. We're just starting, and yeah, let me finish setting up things, and I'll be with you guys. Thank you. All right. Yes. Let's start then our Schiller proposal. So, hello everyone. My name is Gil from X Labs, and this is yet another Shill Your Proposal episode, as known as SYP. Those who are not familiar with it, let me brief you. Shield Your Proposal is an initiative by GrantShares DAO and facilitated by X Labs to discuss and present topics about GrantShares ecosystem and NEW as a whole. Anyone from the community is pretty much welcome to come by, watch the presentation, ask questions, and interact with other participants. We are open for discussing things related to the episode topic. Actually, in originally, Shield proposal episodes were in actually are done through Twitter Spaces. But recently we realized, okay, people need to visualize things when the presentation deals with complex topics. So, when demoing a product or discussing solutions, presenting academic findings, etc. So that's why we decided to also use YouTube live streams. The only kind of problem is that participation from the broad audience, in especially from Twitter, is a bit difficult here in YouTube, and but we're trying to find a solution for it really soon. In the meanwhile, you can use the live chat here in YouTube to shoot your questions. And by the way, also to subscribe to the X Labs YouTube channel. Okay, so the main goal of Shield Your Proposal is to create a pretty much relaxed and cozy environment that people get to express ideas, topics to the broader community. So grab a coffee, tea, or even a beer, of course. Well, it might depend on your time zone, and enjoy the ride. Okay, so another thing that we have to set up here is that we need to have a bit of a structure on how to run things. So the way that we typically do in our episodes is to spend a bit of time asking questions to your guests or watching their presentation. Actually, actually to spend a bit of time asking questions from your to our guest. Today is Nicola, or in watch the presentation for, let's say, like around 30 minutes, and then like leave the last 15 to 20 to audience participation. Yeah, as long as things run smooth, it's all fine. So thanks everyone for watching and listening in here and staying with us, of course. Okay, so today we have our guest, Professor Dr. Nicola Dimitri. His academic interests, and I'm going to read here a bit, are mainly, of course, blockchain in cryptocurrencies these days, but also procurement, auctions, and market design, game and decision theory, contracts, and the economics of innovation. In around, I think, September or October last year, he submitted a GrantShares proposal entitled An Analysis of the Two Tokens New Economy, Milestone 1, which was approved and grants were released by the GrantShares DAO. This year, a few weeks ago, he submitted the Milestone 2, which is the continuation of the original research. So today he is actually here to talk about his findings of Milestone 1 and what are his plans for Milestone 2. Of course, hoping that a GrantShares DAO member can endorse his proposal. So, all right, Nicola, thanks for coming. And yeah, the stage is basically yours.
Uh, Thank you, Gil. Can I go ahead?
Yes, of course,
Can you
the
hear me
stage is
well?
yours. Yes, absolutely. Green light.
Very good, very good. So thank you very much for your presentation and the invitation. So what I'm going to talk about is this Neo2 token blockchain project on from an economic perspective. As Gil said, last year I submitted a fund application for funds, which was successfully accepted, and that gave rise to milestone one, as you see, which in the first bullet point, which has been funded. And now I'm submitting the second part of my idea, my project for an investigation of the economics of the Neo2 token blockchain. And I would like to take this opportunity to thank GrantShares for funding the first milestone, considering this second milestone, and for inviting me to deliver this presentation. So just to get quickly to the point, I was requested to talk about the main findings of milestone one, so the main findings of the first part of the project, and to illustrate some research perspectives of milestone two. So that's what I'm going to do. And they are, as I said, formally separated, but they have to be conceived as a unique sort of big project on the economics of Neo2 token blockchain. Now, again, to drive you immediately to navigate you immediately to the main findings. Let me just anticipate that milestone one, which I'm going to start with, and which I would like to call the economic fundamentals, because that's where I'm laying down what to me are some simple economic, but hopefully effective economic considerations to, extract or identify the economic fundamentals of a two-token economy like NEO. So in this economic fundamentals, milestone one, which I already handed in, part of the project, I've done mostly two things. And the first goal was to identify and construct some economic indicators that would actually represent and give interesting information on how the economic side of the blockchain is actually going. Okay, especially. I thought this was an interesting point because, to my knowledge, when I submitted the project, I didn't see anything in the literature or in any other reports, etc., which was extensively discussing two-token economies, especially when both tokens are actually traded on the market. Okay, as in NEO. So that was the first goal: economic indicators. What is the economic content and how to represent the economic content of such a blockchain? The second part, which I just sort of mentioned in the final part of the paper, is a short discussion that I will be presenting, though quickly also on this occasion, on a very intrinsic feature which I identify and which is actually characterizing two tokens economy, where the two tokens are traded on the market, both of them, and when one of them can be obtained without any out-of-pocket expenditure, just by holding the other token, as it happens in NEO. This kind of economy, quickly also on NEO is part of this economy, have a very distinguishing feature which I haven't seen discussed anywhere in the detail that I would like to then develop in milestone 2, but which I already, to some extent, anticipate here. Now, I want to stress that this analysis that I'm going to briefly present to you have had the ambition of being useful for NEO to provide insights and support for NEO policy making. So that's the overall idea behind the effort. Now, to start with the economic fundamentals, the point that the question that I raised myself is how to evaluate the absolute and the relative, in economic terms, the absolute and relative desirability of the two tokens. Okay, so how can we quantify? Now, of course, it was natural to refer to market prices, although it's not the only indicator that one could actually consider. Is the, I would say, most natural indicator that one would want to take into consideration. And insofar as absolute, and then I'll tell you what relative means, absolute desirability or attractiveness, as I call it here, the mere market price is perhaps the most obvious, so to speak. So, but then you'll see that it says a lot, but it doesn't say everything. So just taking the two market prices and by PN dollar at time t, that's how to read the PN dollar t, is basically the number of dollars that one NEO token can buy in the market, and by PG dollar at time t is the number of dollars that one gas token can buy in the market. Now, of course, you can use different currencies rather than dollars. You can use other fiats or other cryptocurrencies. But if there is no possibility of arbitrage, namely for the possibility of arbitrage have been exploited by investors, then what it would matter perhaps, of course, it would be the absolute value of prices. But as you will see, whichever market price you're going to consider, whether with respect to dollars, euros, British pounds, or Bitcoin, whatever, with no arbitrage possibility, the ratio, which is going to be a privilege index indicator for relative desirability of the two tokens, will not be affected by the currency that I'm referring the price to. So, for example, 2 days ago, when I was finalizing, in fact, these slides on CoinMarketCap, we had these two values for the two prices, the NEO and the gas prices. And so that's as simple as it is. A natural indicator for absolute desirability of the two tokens is their market price. Now we're going to get into the more interesting, I think, part of it, which refers to the relative desirability. And in general, an indicator of the relative desirability, so how much is the NEO token desired as compared to the gas token, so that's the broad idea of relative desirability. It would be obvious, again, to construct indices taking some functions f of combining in some way the two market prices. And the simplest way is to construct this, what I call exchange rate, ENG, which is the ratio of the two absolute level prices, which this ratio is what I said is actually free from the arbitrariness in choosing the currency with respect to you are actually computing the price. So whether you are considering price in euros or dollars, this ratio will be the same. That's what I mean. And this has a clear-cut interpretation, a very simple interpretation, which is given by how many gas tokens you can buy with one NEO token. Okay, in fact, it's expressed in terms of G over N as a unit of measurement. And that, again, let me say, how many gas tokens you can buy with one NEO tokens. And that's the most sort of natural and intuitive indicator of relative desirability, how much you need of one token to buy the other one. Now, this can be defined even for those exchange nodes where there is no market to exchange directly N with G. Okay, so for a number of exchange nodes where you cannot buy N directly with G, you cannot buy NEO tokens directly with gas tokens and vice versa, you need to triangulate, okay? And so this is always defined because it embodies a triangulation through dollars. But of course, you can also conceive the existence of a direct market N to G directly, which we'll mention briefly later on. So again, just to play a bit with real numbers, 2 days ago, on the 30th, you had this ratio was about 381. So in some sense, according to this ratio, NEO tokens were almost 4 times more desirable in the market than gas tokens, okay? And in general, you may say that an indicator like this, which is very effective, I would say, though simple, can tell you a lot, although not everything. I will discuss this later. This is very effective, and in general, I would say that whenever this index is higher than 1, we could perhaps interpret this as N being at least as desirable as G, and the opposite if the index is no larger than 1. Of course, you can think about other indicators like of relative attractiveness. For instance, another immediate indicator that can come to mind would be the distance indicator, the difference between the two prices, which, however, will not have an obvious interpretation in terms of how many G tokens you need to buy one N token, etc., etc. It would have a different interpretation. It would be the difference in dollars that you can, of course, get by using 1 unit of NEO token or 1 unit of gas token. It wouldn't be so immediate in terms of interpretation, but it could be constructed, and many others could be constructed. Okay, so now here's the point I want to. I already anticipated that market prices say a lot, but they don't say everything. They don't contain all the interesting information. At least interesting insofar as keeping the economy under control is concerned. What do I mean by this? I mean the following. Just consider the number of PN dollars, which is, let me just remind you, is the number of dollars that you can buy with one NEO token. And suppose this price is equal to 2. So in other words, with one NEO token, you buy $2. And this 2 is coming from these quantities exchanged in the market. So on the numerator on top, you got 20, which is the number of dollars that investors were willing to exchange against NEO tokens. And on the denominators, you have 10, which is the number of NEO tokens that investors were willing to exchange against dollars. If the transaction takes place, the price that realizes on the market is exactly this ratio, 20 divided by 10. But you can get two also in a rather quantity-wise in a rather different situation. For instance, you can have $400 offered in exchange of NEO tokens in the market, and you can have 200 NEO tokens offered against dollars. So it's a bit different. Okay, so these two, which is the same in these two situations, would not actually bring you or convey to you any information on the size of the of the exchange quantities behind, which could be very useful, at least in my view, and in fact, to take account. So what is this observation leading us? Is leading us to conceptualize additional indicators which could actually take into consideration both prices and quantities to evaluate the relative desirability of these two tokens, okay, and have an idea on which one is more desired of the two, etc. So in order to construct this combined indicator, I introduce these two ratios, small s and dollars and small g s dollars and dollars. What are they? They are the ratio of the number of exchange tokens in the market. So if you exchange today, if 200 tokens were exchanged in the market against dollars, that will be capital S, which I'm going to divide by the total number of NEO tokens circulating. Okay, so I'm taking the ratio between the exchange and the circulating number of tokens against dollars, of course, and I'm doing the same for gas. Why do I do so? In order to have information from quantities, because the absolute values of exchange NEO and gas tokens may have one big limitation, that if there are many more tokens of one type circulating, that then it would be natural to have perhaps a higher number of that token exchange in the market. But what I think is really counting insofar as the relative attractiveness of these two tokens is the proportion of exchange tokens over the number of circulating tokens. So that's what I'm doing. I'm taking the small s, which is the capital S, S stands for supply, of course, over the total number of circulating. I construct this weight, which, as you see, I call it a pi and dollar. I could have defined pi G dollar in a similar way, having S, small s, G rather than N on the numerator. So what is this weight telling us? It's telling us, for instance, suppose it's a half. Okay, so this is, of course, a number going from 0 to 1. And what about the situation in which you have a half? Pi is equal to a half. It means that N tokens and G tokens are exchanged in the same proportion over the total number of circulating tokens in the economy. Okay, so they're kind of equally desired in a very broad sense because the percentage of exchange tokens is the same. So having introduced this, I construct another simple indicator, more articulated than the mere exchange rate, namely the price ratios, in order to take account of the quantities as well. And the first one I want to introduce to you is what I call the relatively weighted price ratio. So it's a price ratio, but weighted by the pies, which are those ratios that I showed. And this ratio is taking the seller's perspective. So that's another novelty, I suppose. If this ratio by itself is something new, I haven't seen it around myself, but I mean, I wouldn't be surprised if somebody already proposed it somewhere else. But I also didn't find a discussion on a different perspective on these ratios, on ratios like this. And here, let me tell you as a seller's perspective. What do I mean by this? Okay, so look at the numerator. You have P and S. And P, the higher is the number of dollars that you can buy with one token. So the higher is P and S. The stronger in general, you would think, is the N token as compared to the G token. And that comes from price. Well, what about quantity? I construct a power. So I have a power where at the exponent on top, I have pi GS, pi G dollars. So why do I have this, and why do I call it the seller's perspective? Because the larger is pi G dollar, the larger is pi G dollar, so the closer to 1 is getting pi G dollar, the less traded, the less exchanged are N tokens. And that means that those guys or girls or ladies who are actually holding N tokens do not want to exchange them, okay? And that is actually testified by the fact that G is proportionally more traded than N, which means that those who actually hold N tokens, they like it and they don't want to trade it. So the larger is pi G, the stronger is N in some sense from this potential seller's perspective. And likewise for the denominator, the larger is pi N, the stronger is G for those who have G. So if you construct this indicator, it would combine price and quantities. Let me tell you a couple of things about this indicator. We could say many more things, but just to, given the time limit, I would say that if you have the same prices, okay, so PN is equal to PG, which is not the case in reality today, by the way, but if you had this, of course, the exchange rate would be 1 because the price ratio would be 1. But notice that you would have 1 if and only if these two quantities would also be the same, so equal to a half. Okay. Then, in other words, if prices are equal and the proportions of traded N and G tokens is the same, then the index is 1. So in other words, we can take for this index as a threshold for saying N is more desirable than G or G is more desirable than N. We could take as a threshold value, again, number 1. But the difference now, as compared, as well as we did for the exchange rate, for the simple price ratio, but the difference with respect to the price ratio is that you can now have an indicator like this equal to 1, even if prices are different, because it is considering exchange quantities as well, and it's embodying exchange quantity in this indicator. So, for example, look at this very simple numerical example. Instance. Suppose PN is 10, PG is 2. So according to the simple price ratio, N will be 5 times, so to speak, stronger than G or more desired than G in the market. However, according to this compounded indicator, if pi N is large enough, how large is indicated here, 0.77, which means that the number of the proportion of traded N tokens is more or less 3.35 times the proportion of traded G tokens. So N tokens is much more traded, proportionally more traded than G tokens. Then you could still have the indicator equal to 1. So in other words, prices could be different. But if one of the two tokens is traded more than the other, this difference in price could be more than compensated and come up with an indicator equal, a value of the indicator equal to 1, meaning that according to the sellers, okay, we could claim that these two tokens are equally desirable in some sense, okay? So basically a large trade, 0.77 for pi, a large trade in N means that those guys holding N tokens are willing to, being willing to sell more than proportionally with respect to G tokens. And this willingness to sell make the N tokens less desirable than G tokens according to the quantities exchange. And this lower desirability would more than compensate the higher price that realized in the market for N. And so eventually you get a unitary index anyway. The same or similar thing you can do for buyer's perspective, and you can invent other indicators depending upon which phenomena you are more keen in trying to capture when combining prices and quantities, which I think it's very important for an economy like NEO. Now, let me just mention the second main fact, and then I will briefly talk about some perspective. Now, a main feature characterizing two token economies like NEO, where both tokens are traded, that's very important. And one of the two tokens can be obtained without out-of-pocket expenditure. In the case of NEO, of course, if you hold N tokens, you can have for free G tokens, of course, as long as you're active, and that, of course, is costly, but it's not out-of-pocket payment. Okay, it's opportunity cost, but not out-of-pocket. So if there is no possibility of no out-of-pocket expenditure and to get G from holding N, and at the same time, if you can trade G and N on the market, something like this can happen. For instance, suppose you have $1 in your wallet, no NEO tokens, no G tokens. And now suppose you trade this dollar in the market, you buy NEO tokens. You will obtain these many NEO tokens from $1. Now, at the end of each epoch in NEO, you would expect to receive this many gas units, namely the number of NEO tokens times the number of gas units expected per NEO token over an epoch, which is small g. And so now you have these many G tokens and these many NEO tokens in your wallet with $1. Now, what you could do is, for instance, to convert back the gas tokens to NEO tokens, and you will get this many NEO tokens, which to get an EGN is nothing but the inverse of the exchange rate that I defined before. So basically, at the end of the story, you will have this many NEO tokens after having converted the G tokens. And then if you convert all these G tokens, the NEO tokens into dollars, you're going to get back 1 plus something dollars. So basically, you're going to get back more than you actually spent by doing all these trades. So basically, this is the return rate from $1 investing in this kind of exchanging. And here I'm simply observing that if the expected number of gas tokens obtainable over an epoch from one NEO token is not large enough, there would not be incentives to do these tradings. Large enough means that the return rate, which is this expression, should not be larger than the interest rate in the market, the prevailing market interest rate in the market. Here is just an example, 5%. In Italy, it's not that far from 5% at the moment. But that's not the point. The point is the concept, of course. The concept says that the expected number of tokens should not be, G tokens should not be too high with this operation in order for this speculative activity to be, so to speak, prevented, namely an investor should not get more than 90.95 with these numbers, gas tokens over an epoch, okay? In order to find it inconvenient to do all these trades to speculate on the initial investment. Now, why is this, I think, potentially important? Because if this condition, G less than 0.19, which of course will have to be computed with care in the platform, if this is not satisfied, if G is not, small g is not small enough, okay, there could be an incentive to invest for speculative reasons in the platform, and so to see flows of investments going from dollars to gas and back to dollars and then back to gas and back to dollars again. Of course, there will be arbitrage effects, but which may stop at some point is flows of investments from tokens to dollars, dollars to tokens, etc., which could in principle be destabilizing. Arbitrage activity could perhaps stop at some point, but I think that the platform should be very much aware of this possibility and keep the eyes on it. Now, the last 2 minutes, if I may, 2-3 minutes, just to mention what I'm planning to do for a milestone 2, of course, if approved and funded. Now that I've done in milestone 1 the very fundamentals, discussion on the very fundamentals, of course, the paper is much more extended than what I was able to show in this half an hour on the fundamentals. And more work has to be done. Also, more work has to be done before I submit it as a scholarly paper. But the essence is there. Now, what I'm planning to do, based on the fundamentals, is to do the dynamics. Okay, so to have models that are studying the dynamics of monetary holdings, and moreover, to develop in a more detailed discussion this issue of potential speculative trading, entering into more deeper into details on when it could happen, under what conditions, what should we do in order to prevent it, so on and so forth. Now, what about dynamics, which is interesting and which I've done other work in different papers on. The approach that I'm considering to take is what in economics is called the representative agent approach, namely you take somebody like the average individual and then you use the actions of this average individual to find what's going to happen in the whole community. Of course, this is an approach that has limits, has some limitation, but also a number of advantages, because it allows you to proceed not only numerically but also analytically, for instance, in the following way, to find closed solution for the monetary holdings, for the token holdings. For instance, that's what an economist does normally. It stipulates a utility function which is establishing, formalizing the preferences of the average individuals for holding N tokens and gas tokens. Small n and small g's are the holdings of these two tokens. These are two general functions. I assume that V will be increasing in N, H could be anything, could be increasing, decreasing, or it would be interesting to study different alternatives. And then just to give you a taste on what the model would look like, to find out plausible ways to to imagine how holdings, how big or small holdings could be. You will simply think that the average individual will maximize his utility given the budget constraint. The budget constraint is this expression, which is expressed in this particular formula in terms of a fiat currency at time t, but of course you can express it in any currency. And if the solution would be given by the first order condition, so the differentiate u and equalize to 0, those would be the conditions. And for a simple example, just to have a feeling, where both the two functions v and h are logarithmic function, which is a very popular in economics because it captures a number of phenomena. You would have that at time 1, for instance, just to stick at time 1. I'm concluding, Gil,
Yes.
in 1 second. An expression like this, which is analytically close and can give you lots of information on what to expect about gas and NEO holdings in the future for any T. This is just a warning to say that the system could be complex because some of the quantities like prices depend on the agent's choice, okay? Because the price depends on how much people would like to, how many gas holdings people would like to have. And that's the last slide saying that I would like also to deepen the study of the speculative potential for speculative trades. So I'm
Amazing.
sorry I was a bit long,
Yes.
but I wanted to just mention all these ideas, and I hope it captured the interest of the audience. Thank you very much, in any case, for your attention.
Thanks a lot. Thanks a lot, Nicola. Yeah, it was a kind of intense presentation in my point of view. But actually, we have some questions in the audience. Yeah. So like the first question, I'll start like from the first until the last one. So
Sorry, Gil, could I take away so that I can also see the question? Because I now have the
yeah,
slides on my screen. Could I take away the slides?
yeah, please. You can just take away the slides and stop sharing. No problem.
Okay, so that would be easier.
Yes.
I think.
Yes, absolutely.
Yeah.
Yes, no problem. So the first question here that I read is there any evidence or possibility that gas can overtake NEO in price for a long duration of time, like 3 to 6 months? If so, what are the scenarios? And like he follow ups with the question like, can it harm the ecosystem? And yes, that's basically the.
Well, this is what I would like. It's a very important question because what I'm doing in milestone 1 is just to switch on the red light in the sense, look, your economy has got this feature,
Yes.
and this feature, if in some sense exploited in that particular way, could give rise to flows of money going back and forth. What's going to happen? It has to be studied, and that was my plan to do it to do a detailed study in milestone 2 on what are the real chances for this to be harming and destabilizing, potentially destabilizing. But for the time being, in fact, if I can add this, Gil, I was thinking about putting everything in milestone 2, but then I thought, well, I'd better warm them up and make them
Aware, aware.
aware of it from now. But it's the question, not just one question, the one that you raised. This is the question related to this particular point, which I'm planning to investigate in the second part.
Okay,
If
cool. Yes. Yeah, because like in milestone 1, I understand that you set up the fundamentals, the fundamentals of the economic, and then like the second milestone
this is
is to
also
go
part
deeper. Yeah.
of the fundamentals because it's fundamentally intrinsic to
Yep.
the neo token. But it was just 2 pages. By the way, there's also a numerical typo there that I just realized I have to correct. But in any case, the concept is there. The concept
Yes.
is correct. Everything is correct,
Got it.
conceptually speaking. But my goal was to go deeper into it in
Yep.
this continuation,
So
if there will be a continuation.
good, good. So like we have like other questions here. Let me go through it a bit quick. A question also from Dylan is, do these calculations take into effect the entire market where trading can occur,
Oh,
or
that's very
or just in centralized exchanges? So because you have like the DeFi, like for example, like Flamingo in our ecosystem, and is only to which part is concentrated more in the centralized ones?
well. Again, as I was saying at the beginning, my ambition was to provide useful indicators, but also insights to extend what I'm doing. And the question is right to the point. In what sense? Because I considered exchange of tokens against one fiat currency, but I didn't consider quantities of N tokens exchanged versus other fiat currencies, which it would be interesting to do. How many N tokens have been exchanged today against any currency, crypto or fiat, or against G tokens exchanged? Okay, so you can
Yeah.
actually build up ratios which are a weighted average of these quantities exchanged over all different currencies, and that would be interesting to see what happens.
Okay.
So the question is really right to the point. Is to some extent is more related to milestone 1 and extension of milestone 1. But if there was sort of a request for having a better understanding of this extension, I would be very happy.
Yeah.
Of course, still in case to include it in milestone 2 as well.
Got it. Okay, there's like another question here, but I think I can straight away answer it. So the question is, I would like to know if we can and should feed these indicators into the gas generation model. So I mean, this is like this is I think it is one of the goals of milestone 2, or the whole research that was submitted to GrantShares,
Well, if
is
I,
that the outcomes you know could be used, that the consensus could adjust certain parameters of this gas generation.
oh, that's another very good question, which I was hoping to be asked. Now, what I visualized in my mind when I started to start thinking about the problems was a dashboard like my screen at the moment, where all these indicators are there, which will give you different pieces of information on what is happening in terms of quantities and in terms of prices in real time, okay? So that you can actually control the economy from your dashboard in real time. Now, the question is, of course, there is an potential implementability question. For instance, quantities. Can you actually gather quantity in real time from at least the main exchanges? That
Yeah.
I don't know.
Yeah, no, yeah.
That
This
I don't
another
know.
is a
You would
technical.
need that
Yeah,
in order to have informative indicators. But if you can do that, I think some of them you can get. If you can do that, I would sit in front of my dashboard like a captain of the ship and
Hmm.
push buttons in order to regulate
Yeah.
the
Yeah.
economy in one direction rather than in the other direction. So the very final goal is to implement these indicators and perhaps others if you are interested in,
Hmm.
discussing other indicators that maybe could
Okay.
provide complementary information to those ones.
Yeah, got it, got it. Yeah, yeah. There are some technicalities there, which what is possible to do, and following our decentralization model or our consensus algorithm, on the chain. But yeah. But this kind of it's other, yeah, it's different questions. But let me go to another one here. Is does the relatively weighted price
Yes.
ratio need to take into account the divisibility of each token in order to determine relative supply? For example, one neo is indivisible. One neo is always one. You cannot divide neo like to 0.1 neo.
No.
And also the smallest unit of gas is 0.000. Like there is a power for it. So there's both tokens have different types
No,
of divisibility.
indivisibility
And
plays no role because the indicator is defined for natural number, real numbers. It is not defined for complex numbers, but
yeah.
we can go up to all the way to rational numbers
Okay,
with no problem.
good. So yeah, that's good. That's a good one. Cool. So I have like the last one because we are really running out of time. We just passed,
I'm sorry, I
and
was wrong.
yeah, but no worries. So here in this presentation and in the paper for milestone one, the dashboard was said to be used for policy making. Can you share more information about how it will impact policy? So, I think like basically what he's saying is that how this can be used to adjust something.
Yeah, well, of course, it depends on the goals of NEO. If you see like that there is a large offer, large supply of tokens in the market, people would like to get rid of. Um, uh, you can perhaps take measures by, I don't know, increasing the supply of N tokens or whatever, or intervening in the market, etc., etc. So I think it would give instrument it would give informative indications on how to drive your intervention in the market if you want buy and sell tokens in order to keep, for instance, to peg the price value at a certain level, um, to sell and buy tokens, to sell and buy fiats, etc., etc., intervene in the market with selling and buying, which is the typical
Yeah.
activities central banks do in order to keep the values at the desired
Yeah.
price, etc., etc.
Okay, got it, got it. Okay, yeah. I think that was about it. There was yeah, some questions. We reached 10 people watching us, at some point, 10, 11, and then it went down, a bit. But I think it is for the first time in the first presentation, in the Shill Your
Yeah.
Proposal episode. I think it was pretty good. I mean, this was recorded. It will be available in YouTube. I'm
Okay.
gonna circulate, the link afterwards
And I'll
for
be pleased to
everyone.
answer more questions if there are.
Absolutely, absolutely. And I hope that also the GrantShares DAO members will watch this or at least some parts of it. So let's wrap things up here, Nicola. Thanks for your time, and appreciate that you guided us to all like the formulas and your ideas and how we're gonna do what we're gonna do to milestone two. Thanks for it, and see you next time.
Thanks to you, and thanks for the invitation, and I hope the talk generated some interest. Thanks
All right,
again.
all right. Thanks a lot, and let's end this stream, guys. Cheers,
Okay.
and see you soon. Bye bye.